So as I was saying earlier, housing finance posting a profit after tax of 195 million shillings. That's in the first quarter. This up from 133 million shillings, representing a 46% increase. So to break down the numbers for us, on the line, Frank Ireri, the MD of Housing Finance. Frank, thanks for your time as always. So looking at net loans and advances to customers increasing during the period by 20% to 31.6 billion shillings. Just break down that number for us right now. I mean, to what extent is that mainly driven by retail customers, and to what extent have you opened up to the corporate space?
Okay, it's mainly driven by retail sales, and especially the strong fourth quarter we had last year. So we're seeing now this impact coming through into the first quarter of this year as we disburse a lot of those sales.
Yeah.
We also are focusing still on the corporate segment, but retail still forms the core part of our business.
So what is your strategy to get into the corporate segment?
Sorry?
What is the strategy to get into the corporate segment if you are looking to grow that aspect of the loan book?
Oh, great. Yes, that is more from the development side in terms of working with corporate developers and also with some of the joint venture projects we have with corporates who own land.
Mm-hmm. Gross NPL increasing there to 2.6 billion shillings. That's from 1.4 billion shillings. Does this indicate a deterioration in the quality of the loan book? Are you concerned about this? What do you see as the main factor driving that?
No. In fact, this is a continuation of the same issue we even had at the year end as we posted our full year 2012 results. And basically, there are two explanations for this, and both happened in the third quarter of last year. One was the implementation of the new Land Act, which actually increases the time that it takes for one to be able to foreclose on a property. It actually increases it by over 100 days. Mm-hmm. So what we're seeing is a timing difference in terms of collecting some of the bad debts. The other is a new central bank guideline for related borrowing. So if one has, for example, two related loans and one is non-performing, you have to classify both. So we're not unduly worried and expect this to reverse by the half year.
Okay, so we could see some upside coming through from that. What about the fact that you've invested 255 million shillings in the construction subsidiary Kenya Building Society? When do you expect to start seeing earnings coming through from that part of the business?
Yeah, that we expect to see coming through from the third quarter of this year, when the first project that we launched around February of last year will be completed and sold. So we'll see that contribution coming through in quarter 3 of this year.
Mm-hmm. So, Frank, give us an idea of what we can expect from the company this year overall. I mean, you've talked about product diversification. You've also mentioned, of course, geographic diversification. I mean, where do you stand right now? What's your key focus for housing finance?
Okay, great. Yeah, in terms of product diversification, and also trying to, I guess, level the playing field between mortgage finance companies, of which we're the only one now left in Kenya, and the commercial banks, was the introduction of a current account in the third quarter of last year. And we expect to see that continue to help improve our margins this year. And then also critically, 3 weeks ago, we got our Forex trading license, because again, traditionally, mortgage finance companies have not been allowed to deal in foreign exchange. Mm-hmm. So now we'll be able to launch foreign currency products, tapping the diaspora, tapping our developers, etc. In terms of expansion, big focus is on the devolved government in Kenya that is being rolled out on the back of the new constitution, and now with the new government in place. So expect to see ourselves participating more within the 47 counties that have been created within Kenya.
So huge opportunity still in Kenya for you right now. What are your thoughts on the geographic expansion in East Africa, and what type of focus are you putting when it comes to resources and looking at expansion further outside of East Africa?
Yes, we are. It is within our 2012-2016 plan, and we have already started scouting specifically in Burundi and South Sudan, and looking at those two economies again from a supply perspective and supply towards government-related housing solutions on the back of alternative building technology.
Yeah. Frank, one last question. Can you sustain growth like that we've seen in the first quarter? I mean, 46% growth certainly is nothing to snuff at.
Sorry, I missed the last part.
Can housing finance continue to sustain this growth that we've seen coming through in quarter one, 46% growth, and of course a loan book which grew by 20%?
We are hopeful, and I guess the key risk factor will be interest rates. We saw the impact of high interest rates in the Kenyan economy last year and the impact it had on us. If interest rates can be maintained or even lower than from where they are today, then we do expect to have a very strong 2013.